Hi, this is Shireesha from Master of Business Administration, Institute of Aeronautical Engineering. So today's topic is trading account. So trading account is the first primary account in the final accounts. So coming to final accounts, in final account we are going to prepare two types of accounts and one financial statement, which is balance sheet. And now coming to the financial accounts, in financial accounts we are going to have trading account and profit and loss account. So basically coming to this trading account we are going to prepare to ascertain the gross profit. So trading account majorly deals with the direct expenses of the manufacturing unit or of any of the organization. So all the direct expenses are covered in trading account, and all the indirect expenses and indirect incomes are going to be covered in profit and loss account. And now coming to balance sheet. So balance sheet is these two are going to finally ascertain the gross profit and net profit. So trading account is going to ascertain gross profit and profit and loss account is going to ascertain net profit. So finally we can able to understand what is the total net profit earned for a particular year. When we are preparing accounts for a year, so by the year ending we are going to understand what is the net profit earned by a particular organization, and that net profit is going to be carried forward, or it is going to be added for the to the capital in the balance sheet liability side. And coming to balance sheet is a financial statement which is going to have two sides, which is asset side and liability side. So in balance sheet we are going to know what is the status of the financial position of the business. So we are going to prepare balance sheet. So today's topic is completely about trading account. So we are going to much focus on trading account, and then we'll go to profit and loss account and balance sheet in the further videos. Now coming to trading account. So trading account is a statement which is prepared to know the gross profit. Trading account is going to ascertain gross profit. The main motto of preparing this trading account to know the gross profit, and this gross profit we are going to it is not a final profit, it is just a gross, not after the deductions. So net profit is after deducting all the indirect expenses. That indirect expenses will be covered under the profit and loss account. So all the trade expenses are not going to be covered in this trading account. So we are going to consider the expenditure which are direct. So direct expenses can be like which are happening through trade. So when we are purchasing and when we are selling, we are going to have the trade. So when we have the trade, so basically for purchasing goods and selling goods, whatever expenditure we are going to incur, that is going to be covered in the trading account. So the major direct expenses come under are the purchases, transportation costs for purchasing the raw material or purchasing some goods to the organization or to some goods for the factory, and conversion of the conversion of the raw material into finished product. So for that we are also incurring some cost per unit. So that conversion cost is covered in this trading account, packing charges. So all these are the direct costs or direct expenses. So frankly speaking, we can just tell that all the direct expenses are like the factory expenses. So factory expenses are like we are going to record all the purchases, that is raw material, next direct wages, direct labor, direct transportation, So whatever cost which is incurred for converting the raw material into finished product, those expenditure, packing charges, transportation charges, so all these are going to be covered in this trading account. And this trade account is going to focus on purchase, sales and cost per unit, whatever which is incurred for making that particular unit. So basically this trading account is prepared to ascertain gross profit. Now going on with the pro forma of the gross profit. So how the pro forma of the trading account looks like this. So trading account, so first heading of the trading account is trading account for the year ended. So let us say we are preparing trading account for the year ended 31st March 2023. So we can write it like this. We can write it like this. So trading account, the heading of the trading account is trading account for the year ended 31st March 2023. And it is a T-shaped account. Whenever we call it as account, account means ledger. So this is a trading ledger account, we can understand in that way, and it is a T-shaped account. So this is the T-shaped account. So all this side, all the left hand side, we call it as debit side. So we are going to write a DR on the top of the left side, and we are going to write a CR on the right side corner, so that it indicates that the right hand side particulars amount columns are covered under the credit side. And now coming to the items which are going to fall under this debit side of the trading account, we shall understand. Now coming to the first item, to opening stock. Opening stock is the amount of stock which is left over in the last previous year. That stock is started on this we are preparing for 31st March 2023. That means when did we start doing this account? So opening stock can be on 1st April. We'll write it here. 1st April 2022 we might have started the account. So 1st April 2022, what is the stock inventory which is there in the factory? That is opening stock. So that we are going to write on the debit side of the trading account. And whatever purchases, next item is purchases. Whatever purchases we have made, so those purchases we have to write on the debit side. To purchases account minus purchase returns. Purchase returns means here whenever we purchase some goods, sometimes we may be not satisfied with the goods which we have received. So out of those goods which we are not happy with them, we may be returning back. So that we call it as purchase returns, or also we call it as a return outward. So purchase returns are also called as a return outward. So here purchase returns are like sometimes goods can be damaged due to transportation or due to some other reasons. They may be damaged, or sometimes the goods which are spoiled at the so goods which are in transport, sometimes goods can be spoiled in transportation, so or those goods can be returned back. So purchase returns is also called as a return outwards, because we are returning outwards. So those purchases, out of the total purchases, like let us say like we have received 10,000 worth of purchases we have made. out of which we are not satisfied with the worth of goods of 900. So we are going to return the goods worth of 900. So the final amount we are going to write it here, 9,100. This is the figure, 9,100. We are going to write it in the outer column. So now coming to the next item, which is wage. Wage is a direct expenses because all the laborer work in the manufacturing unit and all the employees are going to be worked in office. All the office and general expenses or indirect expenses are covered under profit and loss account. All the factory related, manufacturing related items are going to be covered in trading account. So wage comes under trading account because all the labor are involved to convert the raw material into finished product. So wage is an expenditure. So we are going to write in the debit side. So wages is another item in the debit side of the trading account. And now coming to the next item, freight, two freight charges. Freight charge means, so we do transportation of goods, or we may be buying goods from out of the country. Sometimes we make some like transport through different sources like airways or railways or roadways. Anyways, anyway, we can transport the goods. So for that, we have certain charges for freight for when we are like sending the goods in bulk, then we are going to have this freight charges. So it is also expenditure which is covered under manufacturing related things. So we are going to write in the trading account. Next one is carriage inwards. Carriage inwards means it is also a transportation cost. So to get the goods or to receive the raw material into the manufacturing unit place, so we may incur certain transportation charges, that is carriage inwards. And next one is carriage outward. I'm sorry. Next one is clearing charges. Clearing charges is to make the clearing charges to when after packing we are going to spend some amount of money for clearing all the stuff whatever there in the manufacturing unit. So that kind of charges. And next one is packing charges. After manufacturing the goods, we have to pack them and then we are going to send them into the markets. So that is the charge, that is another expenditure. So we are going to write debit side of the trading account. Next one is dog dues. Dog dues means basically this dog dues or dog charges we are going to have when we are going to send the goods in like when we are transporting goods in ship, then we may have this kind of dock dues. So dock workers are going to load and unload the material which we have sent. So for that we have to pay dock charges to them. So that is another expenditure. So that is also recorded in the debit side of the trading account. Now power for factory. So power or electricity. So for converting raw material into finished good, we are going to incur some kind of electricity charges. So that is also expenditure. So it is covered under the debit side. And now coming to the last one, octroi duty. Some kind of excise duties when we are transporting goods from one place to another, one country to another country. We are going to have some transportation charges. So some excise duties, import duties, all those called as octroi duty. So this is also expenditure for the manufacturing unit. So we are going to write on the debit side of the trading account. So these are the items which are falling under debit side of the trading account. So all these are expenditure except of the first two. The first one is opening balance. So whatever balance which is already left over in the past year, that is on 31st March 2022, whatever stock is left over, that stock we are carrying forward and we call it, but here we don't call it as carry forward, brought down, as we do in the ledger accounts. So we are going to write it as opening stock and closing stock in the trading account. So on 1st April 2022, the opening stock we may take. So that is not the expenditure which we have discussed. So it is not the expenditure, but still we are going to write it in the debit side. And the other one is purchases. 2 purchases less purchase returns. So the net amount we are going to write in the outer column amount. So these are the items, and the rest of all the items which we have discussed till now are expenses for manufacturing the goods for the manufacturing unit. So all these are the direct expenses. And now coming to the credit side of the trading account. So the very first item in the trading account is sales. So we are going to write the sales amount minus return inward less return inward. Return inwards means sales returns. Return inwards means sales returns. So here as we have the return outwards, we may also have the return inwards. So when we have sold some goods to our customers may not be satisfied with the goods, or sometimes the goods are not in a good condition, so they may return back to us. So those sales returns we are going to deduct from the sales and write the net amount in the outer column. And the next item is buy closing stock. And this closing stock is not going to be given in the trial balance. So all the time closing stock is the adjustment. Closing stock is the adjustment, because after closing all the books of accounts for the year ending, then after preparing the trial balance, then the inventory or the stock will be valuated. So this closing stock is going to become all the time an adjustment. And we are going to discuss about adjustments in the later sessions. So closing stock, whatever stock which is left over in the factory, that we have to valuate and write what is the closing stock here. And after writing the closing stock and all this expenditure in the debit side, so then we are going to finalize what is the total of debit side, what is the total of credit side. If we are getting the balancing figure in the debit side, that means we call it as gross profit. If the amount is less on the debit side, if we are getting balancing figure on the debit side, if the amount is something like 10,000 here 11,000, then here if the amount is 10,000, so 1,000 is less here, so 1,000 is the gross profit. So we write it as 2 gross profit. This has to be transferred to profit and loss account credit side. And if it is not so, if the amount is 11,000 on the debit side and 10,000 on the credit side, then the balancing figure is 1,000 here, which is gross loss. If we get gross profit, if we get balancing figure on the debit side, then we call it as gross profit. If we get the balancing figure on the credit side, then it is the gross loss. So after ascertaining this gross profit or gross loss, these has to be transferred to profit and loss account. If we are getting gross profit, this gross profit have to be transferred to profit and loss account credit side. And if we are getting gross loss, this gross loss has to be transferred to profit and loss account debit side. And this is the pro forma of the trading account. Now coming to trading account, one simple, very short example. So basically this trade means we buy and sell. Trade means buying and selling. So basically this trading account is majorly focuses on purchases, sales. So a very small and simple problem, let us discuss now. Sales, we have some amount, 2,05,000. Sales returns 15,000. Purchases 49,000. Purchase returns 3,000. Opening inventory 8,000. Closing inventory 30,000. So trading account 1,500. These are the items which are given to us. So these items we have to put it in the proper trading account format and try to ascertain whether we are going to get gross profit or gross loss. Now we can see this. Trading account for the year ended, we have to write whatever year is given to us, and debit side, here we have to write credit side. And now here sales return, we can write it in the debit side, or we can also do in the other way, minus sales returns also we can write here. Anyways, it is going to be same. Minus 15,000 if we do, we are going to get 1,90,000 in the outer column. Now purchases also, instead of writing here, it will be very clear if we are writing here. So purchase returns. So 3,000. So the final net purchases are 46,000. So now 46,000 plus 8,000, that is 54,000 is the total. And now ending inventory, that is 9,000. That means here 1,90,000 plus 9,000, that is 1,99,000. So debit side it is more. So minus 54,000, let us do it here. 1,99,000 minus 54,000. If we do 1,45,000. Yeah, we got it. So 2 gross profit 1,45,000. So total will be here. Total is differing because we have taken purchase and purchase returns on the respective sides, and we are trying to make the net purchases here on the debit side and net sales on the credit side. So we got the total balancing figure as 1,99,000 on debit side as well as 1,99,000 on credit side. So the gross profit, this has to be carried forward, carried down 1,45,000, and this we have brought down in the profit and loss account, not in the trading account. This has to be given in the profit and loss account. And now let us see another problem, which we are going to cover all the direct expenses here. So now coming to the next problem of trading account. Prepare a trading account for the year ended 31st March 2016 from the following balances. So opening stock 80,000, purchases 4 lakhs, sales 10 lakhs, freight and octroi charges 13,000, wages 60,000, factory lighting 21,600, coal, gas and water 4,100, purchase returns 24,000, sales return 40,000, carriage on purchases 16,000, carriage on sales 20,000, factory rent 24,000, office rent 15,000, import duty 64,000. So these are the ledger balances given to us, and the closing stock is valued at 1,20,000. So these are the items which are given to us. Now we have to prepare trading account. So now one by one, by looking at this looking at this ledger balances, we will prepare a trading account. Now the format of trading account for the year ended 31st March 2016. So it is already given to us. So 31st March 2016. So now year ended 31st March 2016. So debit side we have written and credit side. So particulars, amount, inner column and outer column amount. And the credit side again particulars, inner column amount and outer column amount. Now coming to the first item, it is opening stock 80,000. So we shall write to opening stock 80,000. Directly we can write it in the outer column. Next, purchases 4 lakhs. To purchases 4 lakhs because I am writing in the inner column because we may have purchase returns. Now sales 10 lakhs. So buy sales 10 lakhs. I am writing in inner column. Next, these are done. Freight and octroi. It is expenditure. Freight and octroi 13,000. Next item is to wages. Octroi is done. Wages 60,000. We are going to write in debit side because it is direct expenditure. Next, factory lighting. It is absolutely related to factory or manufacturing. So 21,600 to factory lighting. Next one is coal, gas and water 4,400. It is also expenditure to coal, gas 4,400. And purchase returns. Now we can see purchase returns. It is 24,000. So here we wrote it in inner column, right? So here we have to less purchase returns. How much? 24,000. 24,000 we have to deduct here from 4 lakhs. That is 3 lakhs. So in outer column we have to write 3 lakhs 76,000. Next, sales returns 40,000. So minus sales return 40,000. From 10 lakhs we have to deduct. So 9 lakhs 60,000 is the final amount of net amount of sales. Next, sales purchase returns are done. Carriage on purchase. Carriage on purchase means when we purchase, we are going to get the goods in. So that is carriage inward. Carriage inward. So it is also expenditure. So we write carriage on purchase. The amount is 16,000. So here we also have carriage outward, that is carriage on sales. If carriage on purchase and carriage on sales both are given to us, we are not supposed to write both the carriage on purchase and sales in the trading account. We have to write carriage on purchases in trading account and carriage on sales we are going to write it in P&L account, as because after we send the goods to the market, from then the general and administrative, promotional, advertisement, all these expenses shall be covered under profit and loss account. So carriage on sales does not cover under the trading account. So that is the reason we are not going to record this carriage on sales. Now coming to factory rent. Yes, we have to write this factory rent in the, because it is a direct expenditure. To factory rent. Amount is 24,000. Next one is office rent. Office rent does not come under manufacturing or trade related category. So this office rent is also not covered under the trading account, but it is going to be covered under profit and loss account. And the last one is import duty, 64,000. It is also comes under trading account. So to import duty, 64,000. And the last one is closing stock, 1,20,000. So we have to write on credit side of trading account by closing stock, 1,20,000. Now we have to make the total balances of debit side and total balances of credit side. So we shall do it here. 1,20,000 plus 9,60,000, that is 2 lakh, 10,80,000. And the total of debit side is debit side is 6,58,400. Now total of credit side is 10,80,000 minus 6,58,400. We have to find the amount now. So 4,21,600 is the balance. Now this is the balance where we have to write to gross profit, 4,21,600. So now the total of debit side is also 10,80,000. So the balancing figure we got in the debit side, that is we are short of 4,20,600 on the debit side. So we are getting gross profit. If we get the balancing figure higher on the debit side and lesser on the credit side, then we get gross loss. So here this has to be carried, or the gross profit has to be transferred to the profit and loss account credit side. So this is all about trading account. Thank you.
Like, share and subscribe. Hit the bell icon for more updates.